All right, this is an urgent chart reading on Bitcoin that we are in desperate need of getting into. Yeah, it's been a minute. Excuse me, you were given a video maybe a few weeks ago. We're not even going to talk about that. We're just looking at current price action. We're going to go over a few things that I see and possibly, well, yeah, definitely we're going to take a look at my setup. There's a few new things I added into it, but just follow along. Again, if you're uh, hopeful, if you're hopeful to become a master trader one day, you just reverse engineer what I'm doing and what works from what I'm doing. Anyways, not everything works all the time, um, and you'll be able to figure out how to incorporate it into your own trading strategy. So first thing we're going to do is look at a bare naked chart on the. We're going to keep this real simple. We're not going to go too far out. We've been accumulating here in this zone. Let me get reaccumulate to what? No, that's not the one I want. To how I've been doing things. This is for members only right now, and then I'll release it at the end of the day for everyone else. If you, yeah, on YouTube. Um, so first thing I want to see is I want to show you is the range for the top that we received or that we got into. Starting there, we were looking for a 180-day range before we started to see a breakout or a breakdown. And currently we are at yesterday was 180 days. We got a retest of the zone down here, down to 555, 500, 55, 600, however you want to see it this morning, off of the um, core inflation data news, which was positive. We hit the expected number for a year over year number. So what that shows is that the market should be comfortable to quote unquote trust that the Fed's plan has been working since they've gotten inflation down almost an entire percent over the course of the year. So you're going to start to see a lot of volume come back into crypto, into stock market and indexes and bonds, the whole nine, and leaving out of the US dollar. As you can see right now for Bitcoin, we dropped down to 55,500 and we've been pressing up um, since then. We had a slight delay, but it's been up only all this morning. So we happened to get a weekly cycle low at 49K, and we got another daily cycle low at 52,500. Those who were smart enough to get in under 54K, you're sitting pretty right now. And we gave that out to the members group around 54K a few days ago as well. So you should be sitting pretty right now. So if we zoom in, still bare naked, we're still using the 52.5 as the low, and 52 right here. 52. What's the low on this chart? 52,000, almost 600. And then we got the retest this morning, as I said, at 55, almost 600 as well. And we've been going up only. So what we're going to do is we're going to take this 65K high here to the 52,500 low. We're going to run it up, and the first obvious thing you can do is say, oh, look, there's the 618. So what I like to do, 618 as part of the beginning of the golden pocket. That's why it's gold. What I like to do is click over here. This is on Trading View. I like to click somewhere near that level, sometimes a little bit lower, and then I'll click on the plus and add alert. And you can do this on any chart. Doesn't matter, Solana, Ethereum, whatever. And I set that as an alert, and so now I have my alert set on Trading View that I'll receive to my email and on just out in the open on the chart as well while I'm using it, if that level gets hit. But we're not just using Fibonacci as the area that we're looking for without any other indication, right? Obviously, we want to get through this tough area here, this volume here. So the next thing that I wanted to utilize to figure out where we're going was actually the order block finder. Okay, you can find that in the indicators up here. I marked it out as a favorite. This shows where bullish and bearish volume is sitting at and how heavy that volume is. The wider the dashed lines are, the more volume there is there. So you can see this bearish order block volume that came in here on August 14th. This may have been a group of people who are like, all right, we're setting this level as a bearish level for the next time this area gets retested, after we say it's a market maker, after we drop down under this level and we come back up, it can serve as resistance. And that's if they're still holding it. This indicates that they are still holding it, but that's if they want it to stay there or not. If they want it to stay, it's a nice test level to see if we're going to continue up, or it'll be a nice little reset to pull back down and reaccumulate somewhere in this area. There's a chance that we're at the beginning of, going into my next next theory is that we're at the beginning. This marked 52,500 on September 6th, marked out a daily cycle bottom. And so what that is telling us is that we should expect that wave 4 on the Elliott wave has ended. And we can go into the weekly real quick just so I can show you. Might not have to go into weekly. This is I know how to look at Elliott wave. I know the basics, but now I'm just using what they've given us. So we'll have to go into the daily. Elliott wave is showing that wave 4 in its mind ended on 49K. Okay, it doesn't look like that's 100% true. That is the lowest point of this mark, of this area, of this range, and that happened to mark out the weekly cycle bottom. Okay, but we also had basically a retest of this area with 52.5. So what that's telling me is that we're at the very start of wave 5, and you can see the dotted lines here. These are it's experimental, and they're going off of Fibonacci's. The Fibonacci sequence. These are estimates. When it's dotted line, it's estimates. When it's solid line, it's fulfilled, right? But what it's trying to tell us is that we should see something between 78,500 and almost 97K. If we're going off of the size of wave 2 to wave 3, then we would see 96K. If we go slightly, I believe it's 75% of wave 3, 70% of wave 3, we'll see 78K. And that's on the daily chart. But if we go down to the 4-hour, which is the one I really want to show you, we hit a wave 5 and we had an ABC down. Just follow along. You don't have to know exactly how this works, but it's usually wave 1, 2, 3, 4, 5, and then we have an A drop, right? So then we go into ABC, right? And then we have another count starts, 1, 2, 3, 4, 5. Got it? Typically, the biggest rule that you want to remember is that whether we're going up or down is that wave 5 can be the same size or 70% of the size of wave 3. So on the 4-hour, it's not showing. It's actually not showing a smaller projection, the 70% projection for wave the copy of wave 3 being wave 5. Okay, it's not showing the lower projection. So if wave 5 is equal to wave 3, then it's expecting to see 59K before we move up higher. But if you take, if this is the 70% marker, because if we take a measurement of wave 3 and we apply it to the end of wave 4 down here, you see the wave 4 brackets, it's the end of wave 4, apply that to the start of wave 5, that takes us damn near 60K. Okay, and if you expect an overextension or whatever the case may be,
for other factors, then we could hit somewhere around 60K. But if we're taking this at its word, then let's move. We can move. I wish it would let me. We're going to move this down under the. We're going to move the alert under. We're going to move it to 59,900. But what it's saying, if we continue up as it looks like we are, you're going to want to just play it safe and put a sell order here at the top of this bullish order block. So, and going back to what we were talking about bullish order block, we're on the 4 hour. We happen to get one on the 4 hour, we got one on the 4 hour on August 28th, right? So that's saying we have positive volume that's going to help lift us through this level, right? Ultimately getting to the 61K level. If we get an overextension past there, this is another level to look at. 61,000. It's the solid line you want to take a look at. I'll make a video just talking about the order blocks, but we're looking at 61,170 something. We'll mark out there, and I'll actually put it back on 60,280 because if we're at the very beginning, what seems to be the very beginning of a wave 5, then all the volume has started to come in at this level. And it doesn't matter where you got in from 52K on up to 55K even, or even 57K. If you got in 57K, you want to average down. You don't want to go all in yet. You want to keep your liquidation level under this level, under 49K. Okay, that's the first thing you want to do. You want to keep your liquidation level under that level. Don't go all in and have your liquidation level be at 56K. No, you need to have your liquidation level down under 49K. Okay, ideally under 38K, and I'll tell you a reason why. You want to keep your liquidation level under the potential of where it could go in a bearish move down, say a black swan event. You want to keep it under that price right there, 38,500. So wherever you're getting in at, keep your liquidation level down there. All right, so we're getting all this volume in. We should be getting all this volume in here. And if you look at the 1 day, another thing to take a look at or to be aware of is we're blasting through this bullish order block, which is what you're supposed to do. It's supposed to serve as consolidation area. The next daily level we'll be looking at is 66K. Okay, we're going to mark out that 66,600 as well. And 66K is important because over the course of this 170-day, 180-day accumulation, over the course of this 180-day accumulation phase, we've hit 66K multiple times, right? Whether we couldn't hold above it in this area, we tried to get back above it again, failed again, came short of it again. Now we should be expecting that we should be able to, over the course of several days, few weeks, we should be able to get to it and finally blast through it. Again, this level is showing bearish order block, but at the same time, it's pretty thin from this perspective. We're zoomed out, but from this perspective, it should be very thin, right? That's the only existing order block, bearish order block level right now. So right now, ultimately, we want to accumulate anywhere between 53K and the current levels right now. If you can get in, if the opportunity does present itself to get back in at 56 something, this is where you're going to want to start accumulating, because we have the FOMC interest rate cut meeting happening. We're definitely getting a 25% cut. We could possibly get a 50% cut. And if you've been paying attention to any of my posts in the Discord, then you would know that I firmly believe that we're going to see a 50% or 50 point interest rate cut, just like we saw September 18th, 2007 to
to lure in investors into what could be a possible blow off top going into the end of October. So we could see the market top out at the end of October. Um, let's see if we go to the 3-day, what we see. So I see end of October, we could see that 78. Well, let's just go to the daily. I don't know what's going on here with the Elliott wave. We could see somewhere between 78K and 96K before the market possibly tops out and we come back down to possibly 30. We come back down to possibly 30K. Revisit this area. Where is it? Yeah, this area down here. Even this valley at 26K is possible, and then we reset the market for another 2 years. Ideally, we want to go to 78K before before. Honestly, we want to see 96K after October, after November, before the end of the 2-year cycle high is printed. We want to just continue to go up into March, April, May before we finally top out and then start our 18-month bear market. We don't want to see a early cycle high happen before November, right? So we're gonna keep it at that. Again, just accumulate at these levels. If you're just now getting in, if you were waiting for what God knows what reason, we've been telling you to get in since 53K, 54K, then just buy in anytime we do get a dip on the 4-hour or higher time frame. Then just buy in, right? Whether you're whether you're spot trading or you're actually along for the ride and in a long Bitcoin long. And again, this is a good indicator for the entire market, right? Because Solana, we could be doing. Let's try to implement the Elliott wave here. I don't think I saved it. And we'll look at the save. Okay. The daily's trying to say we're in a. Yeah, it just looks completely different. We're at the end of a C, so we should be starting a 1. We should be getting a 1 very soon. If we could zoom in, it's not even showing a projection, which is not good. 5 on the 8-hour, then this should be a A. This should be a B. That should be a C. I don't know why it's not showing it. Okay, we go to the 3-day ABC. We should be bottomed out here. The low was 120, right? The low was 120. That should be the low for this area. Okay, deviation lower. We should be at least going back up to 147 in the interim, but we should also be printing out the first 1 wave sometime somewhere. And apparently it doesn't want to do it at all in the 1 week. All right, so anyways, Ethereum as well. Let's see if we can. Ethereum just printed out its final C on the daily, so we should see a little short, little burst up 1 very soon. And that's what it looks like on most altcoins as well. It looks like Bitcoin is ahead of everybody. It's showing the 3-day wants. What is that? The 3-day wants 106. That's not right. That would be the end of everything if Ethereum went back to 106. Okay, so it looks like the daily is showing that it wants we're at the end of a C, that it wants to go up to a nice little short little 1 eventually, which will be a higher low back into 29, around 29K or so. So just keep an eye on that. The rest of the market should be following Bitcoin, and everything should be good from there. If you have any questions, shoot them off in the group. Thanks. Oh, and go get the new, if you haven't seen, go get the new mug. Where is it? At the Black Lion Kings shop. Go support us. Only $8 shipping. Yeah,
It's there to you're doing it to support us and show your love for your favorite Discord group. All right. Thanks again, and hope that helps.